Hello everyone. Today I'm reviewing CryonX EA. To summarize, the numbers look extremely attractive right now, but the backtest looks too perfect. So this is an EA you should judge very carefully. If I had to describe this EA in one sentence, it's a high win rate scalping EA with poor risk reward. Because the stop loss behavior appears slow, it's not surprising that a short-term forward record looks good. Please keep that in mind. I've seen many EAs like this perform well at first, only to break down once the forward period gets longer. First, let's look at the forward performance. CryonX EA has its forward results published on MQL5 Signals. That's a positive point, because it means there's a track record you can follow on a third-party platform. Now, as of today, the forward metrics show a very high win rate and what looks like a small drawdown. Losing trades also appear limited, so on the surface it looks like a strategy that keeps losses tight. And based on the trade history, there are no strong signs of classic grid or martingale behavior. However, the key issue here is that the track record is still short. Because the operating period is short and the number of trades is limited, it's not enough to draw a statistically solid conclusion. Next, the backtest. For validation, I personally ran a backtest using the MT5 Strategy Tester. Here are the conditions. The test period is from January 1st, 2005 to January 10th, 2026, about 20 years. The symbol is ZOST. Initial deposit is $10,000. Lot size is fixed at 0.01 lots. Settings are default. Spread is 60 points. Under these conditions, what immediately stands out is how smooth the balance and equity curves are, almost a straight line upward. For 20 years of data, having so little visible drawdown honestly looks almost too perfect. Of course, good results are good results, but that level of smoothness can also feel suspicious, like the test may be idealized too much. Now, the statistics. The win rate is abnormally high, and it almost never loses. Despite a large number of trades, losses are extremely small. That looks attractive, but it can also look too good to be true for an EA. The most important part is the nature of the losing trades. Losses are rare, but when you look at a clearly visible losing example, you can see that losses can be relatively large compared to the small take profits. In other words, it's hard to say the risk-reward is good, and that can lead to a situation where performance collapses quickly once market conditions stop matching the strategy. Also, when you look at the trade behavior, it tends to hold positions through adverse moves and close only after the trade turns into a winning position. This suggests stop-loss behavior that is slow or stop distances that are wide. So here's the backtest conclusion. The numbers are outstanding and the curve looks beautiful. But it's beautiful to the point of being suspicious. And when you focus on how it loses, the stop appears slow and the risk-reward looks poor. So you can't rely on the backtest alone. Next, let's talk about the logic and risk characteristics. Here I'm organizing what we can infer from the forward trade history plot and what the developer claims. The developer says it's mainly for ZOST, recommends low spreads and strong execution conditions, and claims it does not use grid or martingale methods. But these are just claims. We still need to confirm behavior through actual results. Based on the trade history, CryonX EA looks like it targets small price moves and rotates trades quickly rather than holding for large trends. In other words, it looks like a scalping style EA. With this style, results are strongly affected by execution conditions, spread, execution speed, slippage, and latency. Even if the backtest and short forward record look great, performance can change significantly depending on the broker and VPS environment. So reproducibility should be judged cautiously. And again, an important point. Visually, there are no strong grid/martingale-like signs in the trade history. That's a positive. But the biggest concern is this. It appears to be a scalping EA, yet the stop-loss behavior looks slow. Scalping stacks small profits, so if stops are slow, it can break down from a single sharp move. During calm periods, the win rate can look very high, but when volatility hits, many small wins can be wiped out by a small number of large losses. So for this EA, the win rate is not the main story. The real question is what happens to losses once losing periods start. And with scalping strategies that use slow stops, backtest curves can easily look beautiful. They can also be fragile when conditions change and over-optimization becomes a serious concern. The truth is, The only way to judge whether it's over-optimized is to keep observing the forward results over time. Finally, the summary. As of today, CryonX EA looks very strong in both the forward record and the backtest. And there are no strong signs of classic grid or martingale behavior. Those are positives. However, there are three major cautions. First, the forward record is short, with too few trades to make a confident judgment. Second, the backtest curve looks too perfect, so overfitting is a real possibility. Third, it may be a scalping EA with slow stop-loss behavior, which could be vulnerable to a single sharp move. So in practical terms, it's better not to rush a buying decision until a longer forward record accumulates. Instead of focusing on win rate and how good the curve looks, you should focus on how losses appear, maximum loss, tolerance during losing streaks, and how floating drawdown expands. And because execution conditions may strongly affect results, it's also important to watch future buyer feedback and real-world reports. So my conclusion is, CryonX EA looks promising, but it's the kind of EA you should judge only through careful, ongoing validation. That's where I want to leave it for now. Thanks for watching.